I'm Howie Lim. This is Money Hacks by the Business Times. Direct data center investment in the region experienced a record-breaking 2024, reaching $4.7 billion US dollars. And this strong momentum has continued into 2025. The growth is fueled by the rapid adoption of AI and cloud computing, an increase in general data creation, opportunistic sellers recycling capital for new ventures, and a diverse range of domestic and foreign investors eager to access this high-growth asset class. Eager's the right word. How can we get in on it? Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And helping us out today, Daphne Tan, Head of Business Development from CMC Markets, and Shun Endo, Head of Data Center Capital Markets Asia Pacific from CBRE.
Thanks, Howie, for having me. For retail investors, the easiest way to get in, because they can trade it on the exchange or through a broker, would be REITs. Of course, there are a large variety of REITs, but what they can look at is global REITs as well as local REITs. So the thing about data centers, it seems like a very large idea, but what they probably want to focus on is who are the tenants of these REITs. Because we are aware of people like hyperscalers, companies like Google, Microsoft. So generally, you want to target REITs that do have hyperscalers because that helps with longevity and also the tenure of the lease. So for REITs, they actually get about 4 to 6% per annum, which is not too shabby if you want to have it as like a base in your portfolio.
So I think generally speaking, data centers is this massive buildings that require a lot of capital, so to say. And that's because obviously there's a lot of servers in the data centers and the building itself is quite large. Generally speaking, I think in the current market, a lot of the investments are coming from more institutional capitals. And so when I say institutional capitals, they're real estate funds or the infrastructure funds or DC operators that are building it out for themselves. But I think for retail investors, one of the kind of entry points into this sector is the public REITs. There actually are data center dedicated REITs in certain markets. Some of them are actually in Singapore, some are in the US, and there are REITs in other markets that are not wholly dedicated data centers, but have data centers in the REITs itself. So I think those are good entry points into the sector. But I think the returns obviously will differ in different markets. So kind of hard to say what the returns are on a general basis.
Ooh, that's promising. But with the rapid advancements in technology and AI, how resilient are current data center designs and infrastructure to obsolescence? And what measures are being taken to future-proof these investments against evolving technological demands? I bet investors are worried about that. Here's Shun Endo from CBRE.
I get this question a lot. At any data centers, especially the equipments inside, when I say equipment, the semiconductor chips and the servers, they are continuously evolving over time quite rapidly, as you mentioned. So that's something to watch out for. But what needs to be considered is that a lot of these data center operators, they're simultaneously putting the capital in to update these equipment, so to say. And they're investing a lot of capital to keep this up to date. So the inside of the data center is actually quite up to date. And given data center won't go obsolete tomorrow. But I think the key point to be competitive as a data center is really two factors here. And that's more of like the structural factor of it. What is a floor world and can it hold up to these massive servers that are in there, and also the power or the electricity. Is there enough electricity to kind of facilitate these equipments? And I think those two factors are quite key in keeping these data centers up to date.
Yeah, that's a very good question, because even with our regular iPhones, you can see how fast they're changing that. So what data centers are doing to future-proof that, they're actually working on modular and scalable designs. So think of them as like cubes, for example. So every time they need something else, they just add it on rather than having to demolish and rebuild the entire thing. So that makes it easier to upgrade software as well, so they can move forward with the advancement. So like a software upgrade rather than an entire new piece of hardware. And also they're working on things like using cooling systems, liquid cooling, so that it extends the shelf life of the hardware.
With everything being so connected and needing energy to power, it'll be lights off for everything when it's, well, lights off, right? Scary.
Exactly. So what the data centers are doing now, they are building a lot of rerouting and backup grids in that sense so that it can switch as easily as possible. But if indeed there were a complete blackout, it would also be affected. And also you've got things like natural disasters. So natural disasters is a big one. If you have like flooding or fires, that's definitely not ideal. In that sense, there isn't currently like a foolproof way to mitigate that risk. But I haven't heard about any large ones that are toppling things over yet. So at the moment, it seems still okay.
Can't say I feel too reassured, but I guess returns can help quell one's fears to a certain degree. Still to come, might market volatility affect your data center investments? And how can you spot the good deals? More with Daphne Tan from CMC Markets and Shun Endo from CBRE in a moment.
Breaking news from the Business Times podcast team.
Hi guys, this is Emily Liu, your host of Market Focus Daily. I've got some great news. Come July, Market Focus is getting bigger. I'll be bringing in market and investment experts into the studio to share analysis and opinions on what moved the markets and what to look out for in the week ahead. Every Friday, starting on July 4th.
Look out for Market Focus Weekly from the Business Times or wherever you get your podcasts.
And now, back to Money Hacks from the Business Times.
Welcome back. We've been talking about investing in data centers with Daphne Tan from CMC Markets and Shun Endo from CBRE. So far, we've covered how there are some risks, but a promising outlook nonetheless. Right, Shun?
So I get this question a lot, and thanks for that. So I think, as I mentioned, in CBRE, we really are strong believers in the data center story, which is supported by the strong fundamentals in this increasingly digitalized world. And compared to other assets, data centers fare well, let's say, in a given situation where there's an economic downturn. And there's a couple of reasons for this. There's two parts. And, for one, that the leases for these data centers, they're actually lasting on average, let's say 5 to 15 years. So you've got a longer lease span. And in addition to that, these people that are the tenants invest a lot of CapEx money into these equipments. So there's a commitment from the tenant perspective, both from a lease term and also from a capital intensive aspect as well. These two factors combined really make the tenant sticky. It's very unlikely compared to other assets where a tenant will leave very quickly because it's not that easy for a data center tenant to leave that quickly. Data centers will fare relatively well.
Yeah, so for risks, what we need to look at is because these are actually being built in urban cities, right? So especially for APAC, they're being built in places like Hong Kong, Singapore, Australia, which have existing buildings already and certain layout plans, as well as power cable connectivity. So what happens is there tends to be certain delays or certain laws that they need to bypass that may make things slower or a bit longer and cause delays. There's also a skilled talent shortage. So AI and data centers are moving a lot faster, the trend itself, than the manpower that we are able to supply and the skills as well. So that may cause certain delays.
That sounds concerning. And there are more, aren't there? The less discussed risks. Ooh.
I think the big one is also data sovereignty. So with a lot of sensitive data nowadays, countries like India and China, they want to have their data localized and stored in local places. But that also can contribute to issues because there is only so much space or let's say providers that are available. So that can cause certain things. And then there's also cross-border flow limits, which also adds to the complexity. So it's definitely competitive. I think the 4 things that investors can look at, the first one is location. The second one is power efficiency. Third is scalability. Fourth is trust. So how reliable is this provider and what investors can look at because it's actually partially public information. Who are the tenants? The most straightforward would be hyperscalers, but you also want to see who the other tenants are or like where their revenue is coming from because that gives you an idea of how long this place is going to last and whether it is worthy for your investment or not.
It also sounds like the data center investing landscape is pretty competitive. How can we assess the key differentiators for successful operators, making sure we're investing in the right place?
Basically, location and power. So you have to be able to build and secure land in an area that is desired by the tenants. And that's quite a given. And then the two is basically securing power to facilitate these assets. You might think, let's say a 50 megawatt is enough for this facility, but maybe the tenant will require more in the future. So securing sufficient power, I think, is a competitive edge along with the location. I think it's a case by case thing. So basically, a lot of the contracts actually for these data centers, the power costs are actually borne by the tenants by themselves. But in such case, obviously, it won't have too much effect on the landlord, so to say. But if the landlord is paying for these power costs, then obviously the fluctuation of the cost will have an effect to the investor.
So what people can look at, I'll give three. So for global ones, there's Equinix and Digital Realty, because there are a lot of big names that are with these providers. And for local, there is Keppel DC. So that's what people can look at. Well, the way I look at it, because if we look around us, AI powers a lot of the things, most of the things that we use nowadays run on AI. So it is kind of resilient in the sense that even in downturns, you need these systems to run, be it like banking or like your phones, things like that. So it is fairly resilient. So it would be considered a defensive asset. But in which case, of course, diversification is always important. So you can have a small percentage of this in your portfolio. And yes, diversify always. Say 5 to 10%, because you would have other types of defensive assets in your portfolio as well.
Takeaway order Money Hacks 229 is ready. So investing in data centers sounds pretty compelling. With AI and cloud services exploding, the demand for these places is just through the roof, making them a really hot growth area. Sure, there are always risks, like things getting old or natural disasters, but smart moves like modular setups and long leases help keep things solid. Plus, data centers are kind of like your financial bodyguard. They tend to deliver steady returns even when the economy gets shaky, which means they're a really smart addition to your investments. A big thank you to Daphne Tan, Head of Business Development from CMC Markets, and Shun Endo, Head of Data Center Capital Markets Asia Pacific from CBRE. I'm Howie Lim, and this has been Money Hacks by the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.